Well, the main takeout is the evidence of a self-sustaining recovery we had 3 months ago. It's now becoming much more convincing. We're seeing prices sustaining strong gains. Nationally, price growth is a touch over 7%, quite the turnaround. And the wider picture is more convincing. Turnover has also lifted more materially on 3 months ago. Sentiment is also still quite positive. So we're all sort of pulling in the same direction now. The upswing's also broadening and strengthening. So broadening outside of Sydney, Melbourne, we're starting to see gains across all areas within those markets and also in some of the sub-markets, particularly the Brisbane market. We're starting to see some tensions emerging around rising prices. Price expectations are still very positive, and how that's starting to affect assessments around time to buy, whether it's a good time to buy a dwelling. And that represents this affordability tension that buyers are starting to find it more difficult to get into the market, and it's understandable. The Melbourne market is only a couple of percentage points off its 2017 peak. Sydney's still about 4 or 5% off, but as we get further along in this upturn and we get closer to those previous peaks, even allowing for interest rates being a little bit lower, we are going to see the re-emergence of those affordability tensions that became very acute back in 2017. So the aggregate's still very positive, but the detail's starting to hint at a key development we expect to restrain this upswing as 2020 progresses. The momentum at the start of 2020 for the housing market's looking very strong, quite a contrast to the wider economy.